This is an FLD trading opportunity in Bitcoin in our new series, One Symbol, One Signal, in which we cut to the chase and identify an upcoming trading opportunity. No discussion of in-depth analysis, a simple trading opportunity for you to consider. So let's take a look at Bitcoin. This is a daily chart of Bitcoin. Today is the 15th of September, and you can see that we have a 20-week cycle trough that has been identified over here as having formed on the 1st of September. 14 days have elapsed since that 20-week cycle trough, and the average length of a 20-day cycle, you should know, is 17.1 days. And so we are approaching the time at which we would expect a 20-day cycle trough to form. Here is the nest of lows at the foot of our chart, indicating that within this period of time over here, we are expecting a 20-day cycle trough to form. Now let's focus on the tool that we are using for identifying our trading opportunity. That is this 20-day cycle FLD. If we label the interactions that have occurred between price and this FLD, you can see that price crossed up above the FLD. It in fact did so over here, and again over here in a rather messy A category interaction. The target that was generated as a result of price crossing above that FLD was over here, and that target was achieved early on Friday. That, you can see, has been labeled as an A category interaction, and what we would expect following a 20-week cycle trough is for price to reach the target of the A category interaction and ideally to exceed it, which you can see it did just a little bit on Friday. Price is now dropping down towards a 20-day cycle trough. At the time that that 20-day cycle trough is expected, on about the 18th or 19th of September, we would expect price to find support at the level of the 20-day FLD. And so here is our trading opportunity. If price finds support at the level of this 20-day FLD at the time that we are expecting the 20-day cycle trough to form, we will have the opportunity to enter into a long trade. Notice the high percentage rating of the sequence of interactions at 62.5%, indicating that we have seen a reliable sequence of interactions between price and the 20-day FLD. There are various methods that we could use for entering into this trade. I will cover 3 of them in this video. The first method is the most aggressive, which is to set a limit entry at the level of the 20-day FLD. That is aggressive because if our analysis turns out to be wrong and price, instead of finding support at the level of the FLD, crosses down below the FLD, proving the analysis wrong, our limit entry would have got us into the trade prematurely. A more sensible approach would be to watch price come down to the level of the 20-day FLD and provide some evidence that the FLD is providing support. Usually this would happen in terms of a candlestick which has both an open and a close above the level of the FLD, with the tail extending down below the FLD. That is an indication that the FLD is providing some support. We could then either enter the next day at the market open, or we could set a stop entry above the level of the high of that bar. A third entry method would involve a shorter FLD. This is the FLD for the 10-day cycle. Notice again the very high rating that the interactions have achieved between price and the 10-day FLD, with 70%. Our next interaction between price and the FLD is expected to be a D category interaction, where price will cross down below the 10-day FLD on its way to the 20-day cycle trough. Of course, our long trading opportunity is to catch the rise out of that 20-day cycle trough. And so this third entry method involves price crossing down below the 10-day FLD and then catching the move out of the 20-day cycle trough as price crosses above the 10-day FLD. This is a particularly useful method to use to get into this trade if price fails to come all the way down to the 20-day FLD as it forms its 20-day cycle trough. In other words, it doesn't even reach down to the 20-day cycle FLD because of the bullish pressure. Why is there bullish pressure? Obviously, because price is bouncing out of a 20-week cycle trough. We have the 20-week cycle, the 80-day cycle, and also the 40-day cycle pushing upwards. Potential stop levels to use to prevent yourself from incurring a loss could be initially below this cycle trough level over here. But as soon as price has formed this 20-day cycle trough, we would raise our stop to the level at which the 20-day cycle trough formed. Ideally, that would be at a level where the 20-day cycle FLD has provided some support, and so we would raise our stop below that level. What about potential profit targets for this trade? Because price has already achieved the target generated by the A category interaction, we need to look at a longer cycle FLD to find a potential target. This 40-day cycle FLD provides us with a perfect potential target for this trade. Price crossed up above the 40-day FLD last week, as you can see, generating a target to the upside, which you can calculate by measuring the distance from this trough on the 1st of September to the level at which price crossed the 40-day FLD. That generates a target a little bit above $120,000, close to $121,000. That would be a good initial target for this trade. However, we are likely to see further bullish action because price is rising out of a 20-week cycle trough, and there are many cycles pushing upwards. Each one of them will generate upside targets. If you would prefer to monitor this developing trading opportunity on a shorter time frame chart, here is a 4-hour chart showing the 20-day cycle FLD and also the 10-day cycle FLD. Notice the accuracy percentage of the interactions between price and the 10-day cycle FLD on the 4-hour chart at over 80%. We have exactly the same situation here, where we are of course expecting price to cross down below the 10-day cycle FLD on its way to forming the 20-day cycle trough. There is the nest of lows. We would expect the 20-day cycle FLD to provide support at the time that the 20-day cycle trough forms. However, it is possible that price won't even reach down to the 20-day cycle FLD, in which case we can take advantage of the bubble that has formed between the 10-day and the 20-day FLDs. As price breaks out of that bubble to the upside, that could be your potential long entry opportunity.